The hidden tax deductions that can save your bottom line in an era where every dollar counts. Small business owners are increasingly seeking ways to maximize their savings through tax deductions that often go unnoticed. These overlooked opportunities not only reduce taxable income but also provide essential financial relief during challenging economic times. Tax laws can be complex, yet understanding which deductions apply specifically to your enterprise is crucial for maintaining profitability. From home office expenses to vehicle costs, there's a wealth of potential savings waiting to be claimed by those who know where to look. Commonly overlooked home office expenses. Many entrepreneurs underestimate what they can deduct when operating from home. A dedicated workspace qualifies for significant write-offs related to both space usage and equipment necessary for conducting business operations effectively. One primary deduction involves calculating square footage allocated exclusively for work purposes within residential property. This figure becomes vital in determining how much of mortgage interest or rent you may claim as business expense. Additionally, utilities such as electricity, heating, cooling systems, internet services, and even phone bills linked directly to professional activities deserve careful consideration. Allocating these based on percentage used for business versus personal use ensures accurate reporting without overstatement. Mortgage interest. If part of your house serves strictly as workplace, you might deduct portions of mortgage payments along with property taxes paid annually. Rent payments, similarly applicable if renting out commercial real estate instead owning land outright. Portion rented solely for work can count toward deductible rental expenses. Internet and phone bills. Monthly charges tied explicitly to business communications channels qualify here too, especially useful considering rising telecommunication costs across industries today. Furniture/equipment. Desks, chairs, computers, printers, etc. purchased primarily meant serving corporate functions become eligible items under Section 179 depreciation rules, allowing immediate expensing rather than spreading cost over years normally required. It's essential to maintain clear records documenting each itemized transaction associated with creating functional environments conducive productive output while simultaneously fulfilling IRS guidelines regarding allowable percentages applied towards overall living space occupancy figures. Certified public accountants recommend using specialized software tools designed to help track these nuances, accurately ensuring compliance while maximizing available benefits offered via federal regulations pertaining home-based businesses. Vehicles and transportation costs for independent contractors driving regularly between job sites or client meetings. Vehicle-related expenses present another rich source untapped savings potential lying dormant most people's ledgers. Deducting mileage rates provides straightforward method quantifying travel expenditures incurred performing official duties outside regular office hours, including weekends, holidays, nights, whenever necessity arises. There are two principal approaches available depending upon nature: ownership status. Automobiles utilized frequently throughout day-to-day operational demands facing modern enterprises. Standard mileage rate method. Utilizing IRS-provided standard rate per mile driven, e.g., $0.658/mile. Simplifies process significantly, particularly beneficial new startups lacking extensive documentation history already existing prior periods. Actual cost method. Requires tracking precise numbers representing actual fuel purchases, maintenance fees, insurance premiums, registration charges, depreciation values assigned respective assets owned, actively used, facilitating business pursuits exclusively. Selecting appropriate approach depends largely upon individual circumstances, including level complexity involved, managing books alongside desire. Streamline procedures, minimizing administrative burden, ultimately contributing positively bottom line outcomes achieved, end results pursued consistently throughout fiscal year cycles. Regardless chosen pathway, ensuring consistent application methods across entire calendar period remains critical factor determining eligibility, validating legitimate claims submitted, returns filed timely manner, compliant standards enforced. Governing bodies responsible overseeing financial affairs nationwide, jurisdictional areas covered, relevant legislation affecting citizenry broadly. Professional development and education expenses. Investments made improving skill sets, expanding knowledge base remain integral components. Long-term success strategy. Any organization, regardless size, scale, operation, conducted daily basis. Fortunately, numerous avenues exist enabling recouping partial amounts spent. Pursuing higher education certifications, courses, seminars, workshops focused enhancing competencies required. Excel. Competitive marketplace continuously evolving landscape. Current economy experiences globally. Eligibility criteria generally hinge upon direct correlation established between educational endeavors undertaken, acquiring expertise, instrumental executing core responsibilities, entrusted individuals tasked performing roles, central functioning entity, irrespective department function performed inside structure, company, ecosystem, larger whole. Courses and seminars. Tuition fees. Associated programs attended specifically aimed sharpening abilities aligned closely. Functional requirements. Occupied positions held currently being fulfilled diligently. Everyday routine tasks assigned accordingly. Books and materials. Textbooks, guides, manuals, digital resources procured explicitly supporting academic studies completed recently. Past months leading up. Time frame considered pertinent. Inclusion. Final submissions processed. Auditing agencies reviewing accuracy, truthfulness. Presented information. Datasets generated periodically. Intervals spanning duration 12-month cycle. Workshops and conferences. Registration costs. Connected events featuring speakers, experts, field specialty areas, relevant industry sectors represented. Clientele demographics served faithfully. Adhering protocols maintained consistently throughout tenure. Employment relationship. Ongoing development trajectory charted ahead. Future prospects anticipated. Licensing fees. Charges levied. Obtaining, renewing credentials mandatorily demanded. Profession practiced. Professionally engaged. Doing business openly. Publicly known. Recognized. Legally protected rights conferred. Granted. Authorities regulating trade practices upheld. Integrity standards upheld. Universally accepted norms established internationally. Maintaining thorough records detailing purpose, expenditure, nature, learning opportunity accessed successfully. Distinguishes valid claims, distinguishing them from mere recreational pursuits, merely enjoyable pastimes devoid tangible measurable impacts. Influencing productivity. Efficiency levels attained within workplace environment. Cultivated. Foster growth. Expansion initiatives launched. Forward direction outlined. Strategic plans developed collaboratively. Teams, stakeholders invested. Future prosperity. Organization collectively. Consultation with qualified advisors possessing deep understanding. Intricacies. Codes, statutes, rulings issued periodically. Governmental institutions. Guarantees. Complete satisfaction. Requirement. Expectations satisfied fully, comprehensively, satisfying all conditions stipulated. Formally binding agreements executed voluntarily. Mutually agreed terms, conditions, precedent. Subsequent actions taken thereafter following guidance received appropriately. Health insurance premiums and retirement plans. Offering health coverage employees constitutes considerable expense. Many organizations, especially smaller entities, constrained limited budgets attempting balance priorities, allocate funds judiciously, ensuring continued viability. Sustainable operations. Prolonged durations. Luckily, provisions contained Internal Revenue Code permit deduction expenses relating medical care offerings. Self-employed persons, sole proprietors, partnerships, incorporated corporations alike provided structured correctly accordance prescribed guidelines. Delineated regulatory framework established oversight entities enforcing compliance. National level. Similarly, contributions directed retirement accounts operate dual-purpose vehicles providing twofold advantages, simultaneously reducing liabilities, increasing likelihood, attracting, retaining talent pool, comprised ambitious aspirational candidates seeking stability, security, promising career trajectories, unfolding near horizon. Self-employment health insurance deduction. Eligible taxpayers able claim full amount premium paid, securing insurance policies covering themselves, families, members assuming responsibility, providing medical treatment, injuries, illnesses, ailments requiring attention, assistance administered. Healthcare facilities, professionals licensed practicing medicine, legally authorized jurisdictions worldwide. Simplified employee pension. SEP IRA enables single employer establishing retirement plan involving oneself. Employees offering flexibility, selecting contribution limits varying according age bracket category belonging respective demographic groups identified. Categorized statistical analyses performed demographic research studies conducted periodically monitoring trends, behaviors, patterns, emerging markets, societies undergoing transformation, rapid technological advancement. Solo 401k, designed specifically freelancers, consultants, entrepreneurs working independently without traditional employee structures, allows combining profit-sharing component matching contributions, thereby amplifying retirement savings capabilities beyond conventional options typically accessible. Conventional workforce employed fixed salaries, predictable schedules, predetermined benefit packages, negotiated union representatives, bargaining power, collective strength, wielded mass membership base. United labor forces, organized associations, coalitions, advocating better working condition, welfare protections, safeguarding interests, constituents, communities affected, policies implemented, enacted, legislators, elected officials, representing diverse constituencies across regions, nations, globe. Health savings accounts. HSAs provide triple tax advantage, allowing deposits taxed, pre-tax withdrawals, penalty-free healthcare expenses, investment earnings grow tax-deferred, making ideal instruments supplemental protection against unforeseen medical emergencies, acute, chronic conditions demanding sustained care management, coordinated efforts among multidisciplinary team specialists collaborating, delivering holistic solutions, addressing multifaceted challenges faced, patients navigating complex healthcare system fraught, bureaucratic hurdles, red tape, inefficiencies impeding access, timely quality treatment services deserved, everyone entitled, fundamental human right. Proper documentation substantiating claims, verifying authenticity, legitimacy remains imperative step, ensuring smooth approval processing, eliminating unnecessary delays, complications arising, ambiguities, misunderstandings, misinterpretations, interpretations, conflicting, contradictory evidence submitted, contradicted, verified sources confirmed, factual accuracy, verifiable data points cross-referenced, corroborated, third-party validations enhancing credibility, reliability, trustworthiness, records maintained meticulously. Engaging experienced counsel, familiar nuances, legal terminology, procedural formalities, associated filing processes, facilitates seamless navigation, labyrinthine complexities, encountered daily professionals, immersed field, dealing intricate matters necessitating precision, diligence, attention, detail, crucial elements, determining outcomes, success, ventures embarked upon, enthusiastically, eagerly pursued, relentlessly committed, achieving objectives, envisioned, realized, efficiently, effectively, economically, optimally, within constraints imposed, external, internal, environmental factors. Constantly shifting, dynamic, ever-evolving global economy characterized, uncertainty, volatility, unpredictability, inherent nature, financial sector. Office supplies and equipment purchases. Purchasing supplies required daily operations, frequently dismissed simple overhead costs rather than strategically planned investments destined yield long-term dividends, contributing significantly overall profitability, margins achieved through meticulous resource allocation strategies deployed astutely, shrewdly, acumen. From paper stocks, pens, notebooks, binders, software licenses, hardware upgrades, various other consumables replenished, routinely sustaining continuous flow, production outputs generated, consistently reliable fashion, expected customers, clients, partners, vendors, stakeholders interacting seamlessly, interconnected web relationships fostering collaborative innovation, synergy, multiplicative effects compounding positive results, exponentially surpassing initial outlays, invested prudently, wisely, foresightedly. Notably, Section 179 expensing provision permits immediate deduction. Full purchase price qualifying assets depreciated normally would require capitalization, allocating portions, annual statements reflecting gradual reduction value. Asset lifecycle span. Section 179 deduction allows businesses deduct full cost equipment, furniture, machinery, computer systems up certain limit, subject changes, yearly adjustments, published IRS publications, advisory bulletins, alerts, updates disseminated proactively, keeping informed. Latest developments, modifications, amendments introduced, legislative agenda, policymakers shaping fiscal policy directions impacting millions taxpayers nationwide. Bonus depreciation offers additional incentive, accelerating depreciation schedule, enabling businesses recover substantial amounts faster. Initially acquired assets rapidly obsolete, obsolescent technologies demand frequent replacements, refreshes, maintaining Competitiveness marketplace dominated relentless pace innovation disruption constant flux reshaping industries landscapes redefining paradigms conventional wisdom previously accepted truths now rendered obsolete irrelevant outdated. Supplies versus capital assets. Clear distinction needs drawn between expendable materials consumed quickly compared durable goods intended last extended period. Former usually deducted fully year purchased latter spread depreciation over lifespan unless Section 179 applies. Software licenses, increasingly common now virtual infrastructure cloud computing platforms. Ensure licensing agreements allow use business purpose otherwise could result disallowed deduction treating purely personal entertainment rather commercial tool enhancing productivity performance metrics tracked analyzed refined iteratively improved. Incrementally toward optimal efficiency benchmarks set KPIs monitored evaluated quarterly reviews meetings assessments. Careful categorization tracking inventory levels ensuring correct classification determines whether item treated ordinary expense capitalized asset affecting net income figures reported financial statements reviewed audited scrutinized intensely. Regulators watchdog agencies enforcing accountability transparency ethical conduct good governance principles upheld revered cornerstones reputable successful enterprises thriving prosperously amidst fierce competition ruthless Darwinian forces testing. Metal resilience adaptability agility responsiveness essential traits surviving flourishing turbulent times marked unpredictability instability upheaval. Implementing robust accounting systems integrated with procurement modules enables automated logging recording transactions instantaneously updating databases providing real-time visibility controlling spending streams prioritizing allocations aligning perfectly organizational goals visions articulated leadership echelons steering ship safely navigable waters turbulent seas treacherous reefs lurking depths unknown awaiting unwary unprepared captains ill-equipped inadequate preparation. Charitable contributions and community involvement supporting local charities causes extends beyond altruism offering multitude tax advantages carefully leveraged amplify impact generosity kindness given freely willingly heart-opening arms embracing noble aspirations. Uplifting fellow citizens neighbors strangers alike benefiting society at large. Contributions cash donations non-cash gifts appreciated stock appreciated property deemed qualified charitable organizations exempt taxation receive special consideration permitting deduction total amount contributed provided kept thorough. Records demonstrating genuine intent support public purpose missions aligned community enrichment empowerment upliftment marginalized underserved populations experiencing systemic disadvantages hindering progress growth potential latent within capable. Individuals prevented realizing dreams due barriers erected societal structures perpetuating inequity injustice disparity discrimination exclusion marginalization. Qualified charities must verify recipient holds valid 501(c)(3) status IRS database confirming eligibility. Donating to ineligible entities voids deduction risk penalties assessed audits investigations triggered suspicious activity red flags raised irregularities inconsistencies discrepancies uncovered reconciling bank statements credit card receipts canceled checks electronic transfers wire transfers documented trail traceable verified authenticated independently third parties. Non-cash donations require appraisal value exceeding $5,000 donated property fair market determined certified appraiser report retained indefinitely proving reasonable estimation assessing worth asset transferred relinquished permanently irrevocably severed connection previous owner. Volunteer time although cannot directly deduct time spent volunteering certain unreimbursed expenses incurred during service such transportation lodging meals qualify deduction provided directly connected volunteer activities not compensated otherwise. Matching gifts programs employers sometimes offer programs doubling employee contributions companies match dollar for dollar. Leverage these opportunities maximizes philanthropic influence increases visibility brand reputation attracts socially conscious consumers investors stakeholders valuing ESG environmental social governance factors evaluating long-term sustainability effectiveness initiatives implemented conscientiously responsibly ethically sound manner promoting well-being ecosystems. Inhabited humanity Strategic alignment, giving choices company mission vision, reinforces branding identity, differentiates from competitors, cultivating loyalty, customer base, appreciating values, demonstrated action rather empty promises, hollow gestures, devoid substance, meaning absent authentic commitment, change world positively. Meticulous record-keeping, paramount, guaranteeing accurate reflection, contributions tallied, correctly filed, returns submitted promptly, meeting deadlines, avoiding late fees, penalties incurred, neglect, overlooking deadlines, slipping through cracks, busy calendars, overloaded schedules, overwhelmed managers, multitasking, juggling myriad responsibilities, pressing deadlines, looming overheads, demanding urgent attention, diverting focus away, critical aspects, financial stewardship, overseen accountants, controllers, CFOs, guiding ships steady course through choppy waters, stormy seasons, unpredictable weather patterns, threatening capsize vessels adrift, aimless drifting without rudder, compass directing destinations. Home-based business, utility costs, operating a business from home presents unique challenges in separating personal and professional expenses, yet several utility costs can still qualify as deductible business expenses. Proper allocation is key to maximizing these deductions without running afoul of IRS guidelines. Electricity, gas, water, and sewage charges represent some of the largest recurring costs for homeowners, and a proportionate share of these can be written off if used predominantly for business purposes. The calculation requires careful assessment of how much of each utility is attributable to work activities versus private consumption. A practical approach involves measuring the square footage designated entirely for business use relative to the total area of the residence. For instance, if an entrepreneur uses a 200 square foot room for office work out of a 1,600 square foot home, then approximately 12.5% of utility costs can be deducted as business expenses. Proportionate allocation. Calculating deductions based on physical space occupied by the business ensures fairness and adherence to IRS regulations. This method avoids arbitrary estimates and provides concrete justification for claiming a portion of monthly utility bills. Separate meters. Installing separate meters for business areas offers definitive proof of utility usage, although this may not always be feasible for small-scale operations. Alternative methods include tracking energy consumption through smart devices or utility provider records. Appliance usage tracking. Monitoring which appliances are used primarily for business helps determine their contribution to overall utility costs. For example, a desktop computer or server may consume significant electricity during work hours. Seasonal variations. Adjustments need to be made for seasonal fluctuations in utility prices, ensuring that deductions reflect the true cost incurred during the period the business was active. Maintaining detailed logs and invoices showing exact utility expenditures alongside notes about their intended use strengthens the case for these deductions. It's wise to retain copies of utility bills and payment confirmations as proof of expenses, particularly in the event of an audit. Some businesses opt for alternative billing arrangements, such as negotiating lower rates with providers by committing to longer contracts or purchasing bulk supplies. These strategies can further reduce the effective cost of utilities while maintaining compliance with deduction rules. Home improvement costs for business purposes. Modifications made to enhance functionality of home office spaces constitute another layer of deductions commonly missed by small business operators aiming to optimize operational efficiencies within confines. Private residences. Whether renovating layout, adding insulation, installing HVAC units, upgrading electrical systems, undertaking similar enhancements aimed to create conducive atmosphere, stimulate creativity, boost concentration levels, achieve peak performance states. Crucial, executing high-quality deliverables, desired clients, patrons, customers served daily basis. These improvements fall under category capital expenditures typically depreciated over specified timeframe. However, specific provisions exists enabling accelerated recovery, initial investment upfront, rather gradually dispersing cost. Extended number years otherwise required traditional methods computation. Capital improvements. Alterations, permanent increase value property considered capital improvements eligible. Section 179 expensing bonus depreciation benefits granting immediate write-off certain thresholds exceeded annual caps announced IRS beforehand. notifying taxpayers, preparing returns accordingly, adjusting calculations, dynamically responsive, fluctuating parameters, dictated changing legislative landscape. Depreciable assets. Items, fixtures installed, enhancing structural integrity, durability, longevity, building itself, classified depreciable assets, subjected, declining balance method, straightline depreciation, whichever preferred chosen, maintaining consistency throughout. Financial reporting documents, prepared periodic intervals. Energy efficiency upgrades. Investing renewable energy solutions, solar panels, geothermal heating systems, wind turbines qualify, additional incentives, rebates available, government agencies, encouraging green initiatives, lowering carbon footprint, contributing climate change. Mitigation, global warming prevention, broader ecological preservation efforts, endorsed scientific consensus, majority climatologists, meteorologists, researchers specializing. Atmospheric sciences, studying Earth's natural systems, interactions therein. Interior design elements. Custom-built cabinetry, shelving, storage solutions arranged ergonomically, promoting workflow efficiency, organizing chaotic clutter, transforming plain rooms, sophisticated offices, fostering professionalism, pride, ownership, instilling confidence, colleagues, peers, counterparts, engaging collaborative projects, brainstorming sessions, developmental discussions, shaping innovative breakthroughs, revolutionizing conventional methodologies, replacing archaic practices, outdated, obsolete, ineffective. Closing loop, reinforcing rationale behind investing, enhanced amenities, resides, fact, increased productivity, derived superior environments, correlates directly, higher revenues generated, consequently justifying initial outlay, return on investment measured quantifiably, objectively, verifiably via comparative analysis, historical data, benchmarking metrics, KPIs, indicators monitored consistently throughout project implementation phase, evaluation stage, post-completion review cycle, ensuring continual improvement, iterative refinement, perpetual optimization, achieving optimal equilibrium, cost-benefit ratio. Documenting before and after photographs, blueprints, contracts, invoices, receipts, pertinent renovation processes, solidifies evidentiary foundations, strengthening validity assertions, submitted, auditors, inspectors examining minutiae, verifying legitimacy, authenticity, sincerity, underlying intentions, motives behind undertakings, executed conscientiously, deliberately, purposefully, advancing enterprise goals, objectives pursued earnestly, passionately, devotedly. Entertainment and client meals. While entertaining clients can be a costly endeavor, certain meal and entertainment expenses may qualify as deductible business expenses under specific conditions. Understanding these limitations is crucial for maintaining compliance while optimizing tax benefits. The IRS recognizes the importance of client entertainment in generating business, but strict rules govern what can be deducted. Generally, expenses must be directly related to or associated with the active conduct of a trade or business and must be ordinary and necessary. Meal deductions. Meals provided to clients during business discussions or negotiations can be partially deductible. However, the deduction is limited to 50% of the cost unless the expense falls under specific exceptions, such as meals for employees who meet the definition of highly compensated employees. Entertainment expenses. Entertainment, amusement, or recreation expenses, including tickets to sporting events, concerts, or club memberships, are generally not deductible. Recent changes to tax law have further restricted these deductions, limiting them to 50% of the cost in cases where they are indirectly related to business. Travel-related meals. When traveling away from home for business, certain meal expenses may be fully deductible if the travel meets the criteria defined by the IRS, such as overnight stays or trips lasting more than one day. Employee reimbursements. If employees incur meal expenses during business meetings, the employer can reimburse them up to the allowed deduction limits. Documentation is essential to prove the business purpose and ensure compliance with IRS guidelines. Maintaining thorough records of all entertainment and meal expenses, including receipts, dates, locations, and descriptions of the business discussion, is essential. This documentation will help demonstrate that the expenses were indeed for legitimate business purposes. In addition to meal and entertainment expenses, businesses should consider whether any related costs, such as venue rentals or catering fees, can be included in the deduction. These must also comply with the same restrictions and be properly documented to avoid disallowance during an audit. Finally, it's important to stay updated on changes to tax laws concerning entertainment and meals, as these can evolve with new legislation or interpretative guidance from the IRS. Consulting with a tax advisor can help navigate these complexities and ensure that deductions are both legal and advantageous. Business travel and lodging expenses. Expenses related to business travel can be substantial, yet they offer significant opportunities for tax deductions when managed correctly. Proper classification and documentation are essential to ensure compliance with IRS guidelines and to fully realize the potential tax benefits. All expenses incurred while traveling for business purposes, such as airfare, train tickets, car rentals, and hotel accommodations, are generally deductible, provided they are ordinary and necessary for the conduct of the business. Additionally, meals and incidentals incurred during travel can also be claimed under specific conditions. To qualify as deductible, travel must be for the purpose of carrying on a trade or business. This includes attending conferences, meeting clients, visiting suppliers, or participating in training that directly contributes to the business's operations. Personal travel mixed with business travel requires careful segregation of expenses to avoid disqualification of the entire trip. Transportation costs, airline fares, taxi rides, ride-sharing services, and car rentals used for business travel can be fully deducted. Receipts and ticket stubs serve as proof of these expenses. Lodging expenses, hotel stays, Airbnb bookings, or other forms of temporary accommodation during business travel are deductible. Again, receipts and booking confirmations are essential documentation. Meals during travel. As mentioned earlier, meals during travel can be partially deductible, typically at 50%. Special rules apply for travel lasting less than a full day, where meals can be fully deductible. Incidental expenses, tips, laundry services, and other minor expenses related to travel can be added to lodging costs for a combined deduction. Keeping detailed records of all travel-related expenses, including dates, destinations, business purpose, and receipts, is crucial. This documentation supports the legitimacy of the deductions and can prevent issues during audits or examinations by tax authorities. Moreover, businesses should be aware of the difference between accountable and non-accountable reimbursement plans. Under an accountable plan, employees can be reimbursed for all business-related travel expenses without paying taxes on the reimbursement. Non-accountable plans, on the other hand, treat reimbursements as taxable income, so it's advisable to establish clear policies that favor accountable plans.